And then when I make money in the metals and mining industry, about taking that money out and having diversification and really focusing on that, creating a larger revenue stream of passive dividend interest income as early as possible. And then that compound interest dividend reinvestment program, sooner the better.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, Migrate to Wealth listeners. Today, I have the pleasure to introduce to you Jonathan Awde. He's the president and CEO of Dakota Gold. It's a South Dakota-based responsible gold exploration development company. So, of course, off the bat, I'm going to talk to Jonathan about, can you really mine in a responsible manner? And then we'll talk a little bit more about the role that gold can play. I think this is not the first time we're discussing gold on the show. We've had previous episodes where we have discussed gold, but we're not talking about is that the taboo attached with the gold, or any precious metal for that reason, is that it requires mining, and mining is, quote unquote, a dirty job. And it creates a lot of, it's not a carbon neutral way of doing it. At least that's a taboo. So we're going to a little bit deeper on that taboo itself, look at how they have figured out, Jonathan and his team has figured out to do it in a little bit more responsible manner. And then let's talk a little bit more about gold as a hedge, especially where we're heading towards across the U.S. economy, maybe global as well. Jonathan, with that, welcome to the show, buddy.
Thanks very much. It's a pleasure to be here.
Yeah, I know you're dialing in from the beautiful Vancouver. I've never been to that place yet, but it's on my bucket list. It's going to get checked off at some point soon here.
It can be a special place.
Yeah. How long have you been there?
I've been here since I was 5 years old, and I love it. You know, having the water in the mouth, and it's very green. You know, it's becoming a bigger city. You know, It's got almost 3 million people. You know, an hour and 10 minutes away is Whistler, and you've got all kinds of hiking and local skiing, and you know, it's a beautiful place.
I'm going to hit you up, man, next time I get there, or whenever I get there, not next time, because I've never been there before. Well, Jonathan, again, thank you for being in the show, buddy. Really, I think the way we want to always open our show is, when you hear the term migrate to wealth, what does that mean to you?
Well, I think, you know, everyone goes through this, you know, a different life cycle, and you go to school, and for some people, it's a really powerful way to you know, build and create wealth when you get educated, because knowledge is power. You know, others can go the entrepreneurial route and drop out of school because they're not getting to where they want to be from a monetary standpoint fast enough, or they don't want to have a boss. So everyone has a different journey, a different path. But from my standpoint, it's you know, the definition of wealth, when you're looking at the monetary side of it, is for your passive income, dividend income, for that pool to grow over time, where that pool of dividend income or interest income can pay for your cost of living. So it doesn't really cost you anything to live. And whether your monthly nut is $10,000 a month or 50 or 100 or whatever it is, where you're not touching your principal and you can safely and comfortably live off your interest income.
I love that, Jonathan. Thank you for saying that, because I can't agree more on that. Right? I was just having a conversation with a dear friend who I've known for 30 years, and we were talking about the stock portfolio, real estate, and everything else. He was saying, I'll never take the money out of stock, but I want to create $10,000 per month income so I can stop working. I'm like, those two don't go. You're talking about balance sheet growth versus cash flow. And the investments you have today, yes, it may grow to a quite substantial amount, because I have no idea how much you have in it today, but it's not going to free you up without creating the passive income stream.
Yeah.
And if the stocks are creating your passive income, great. But if it's not, that's the question. Really, what you want to ask question is, the point is, can my passive income, can my dividend income, can stuff that you don't have to be actively working with, how can I increase that? And then once I'm able to increase that, then I ask the question, what do I really want to do with my life? Because unfortunately, most of us are working at either job or your businesses or whatever, and we may hate it, but we have to work at it, because that's the only way we know how to make money. But once you hit that point, go ahead.
But those that hate it, it's so clear, and they don't want to do. They just want to do what's asked of them. They never want to go outside of their comfort zone and learn and grow, or never want to do more of what's asked of them. And you can see they don't want to be there. They just want the paycheck. You ask them to do anything else, they don't want to do it.
It's pretty clear. You're right.
But you can see those people that light up when they come to work, that are just sponging, And that's, when you're building a team and you have that culture of that full buy-in, that's usually where you get these outlandish returns.
Completely. 100% agree. So Jonathan, how are you doing with your migration to wealth, buddy, on that definition?
Good. I'm well on my way. I've got a diversified, real estate portfolio. I've got investments into, apartment complexes where you have to put the money in with more of a 10-year time frame, where, a lot of the stuff, when you're in the construction phase and you're building. So that's the hard part when you've got a family and you work in a very cyclical business where when money's flowing into the commodity or metal, it's fantastic. Those windows can be short-lived. But again, it's I've got a diversified portfolio now where I never had that before, where if one or two commodities are doing well, real estate's not doing so well because of interest rates or whatever it is, net I'm okay. But it's a journey, and it's about, taking money out of some sectors that are doing really, really well and building a portfolio of these dividend paying assets that are, again, super conservative. They may fluctuate in the principal by, 3 to 5% a year, but you might make 5 to 8% on your money.
Correct.
And just understanding compound interest as early as you can is really important.
Love that, Jonathan. This is amazing, man. So let's talk about your journey into gold. And then I'll give you a little bit of background on that with the conversation we just had. When we talk about creating passive wealth or through dividend income, gold doesn't strike me as one of that asset classes, right? So help me understand your foray into gold. Why did you pick gold as an asset class, especially mining and exploration and development of developing, extracting gold? So give me a little bit background on that.
Yeah, so you're right. So, gold doesn't pay you anything. It costs you to store it. It costs you to insure it, right? So it's a store of value. In many ways, it can act as a currency, and it's probably going to play a greater role with what you're seeing happening with de-dollarization. A lot of the central bank holdings from the west to the east are acquiring and accumulating gold. So, I was given my first gold coin when I was 14.
Mm-hmm.
So I really, from there, had a respect for it and an appreciation for it. And then my education is economics and finance. So it was really a central theme to a lot of the economics classes I took and finance classes. And then when I read a book that kind of changed the way I looked at the world and investing, when I got my first job as a broker out of university, it was at a brokerage firm in Vancouver that specialized in financing small cap metals and mining and some oil and gas. So it was ingrained within the DNA of the firm that gold was a central part of the everyday life and backbone of this firm. And I think that, what gold has done over the last year and a half with rates rising, strong dollar, and for gold to still be flirting with $2,000, I think is remarkable. And I think at some point, this higher for longer thesis with rates being higher, at some point, the Fed's going to pivot, whether that's 6 months from now, a year from now. When that pivot happens, I think gold is going to become more mainstream. And again, this whole brick currency, I don't know if it happens because how long it took for the euro to come into play, culturally, different mindset, ideologies. But gold will play a greater role in the global financial system going forward because it's not like Bitcoin. And again, I've exposure to crypto, but gold has been basically a currency for thousands of years.
Yeah.
And I think it will continue to play a more important role. It's harder to mine. Inflation is rampant with all of the miners. So, and again, you're seeing more and more countries want to have more of their central bank reserves in gold.
In gold, yeah. So Jonathan, before we go further, I know you mentioned about a book. What book was that changed? I have a feeling I know the book. What is that book that changed your perspective about investment and everything?
Well, the first book was called Reminiscences of a Stock Operator.
Oh, love that book. Love that book.
And more recently, more of my business Bible is Principles by Ray Dalio. I think I've read it 8 times.
Both of them.
He's just, you can apply so many of those principles to not just your work life, but your personal life, relationships. And it's a really powerful book. When I read it, when I first started reading it, I couldn't put it down. And, I've given one, my last company that I founded called Gold Standard was bought out by a bigger company. And I gave every employee and every board member that book. And I think it's so spot on in so many aspects and you look at the wealth that he's created and just the way he approaches life, and I really try to kind of model myself after him.
Well, that's actually great because I know both the books. I've read both of them. So the books are definitely, especially the Reminiscences of Stock Operator, I would say. Not everyone may appreciate principles yet, depending on where you're in your life, but you'll get a very good understanding of stock market, Wall Street, or any kind of investing, of how to think about
the psychology. And I learned about, from I did a lot of the Tony Robbins work as well, and I read all of his books and walked on the hot coals. Fear is a more powerful motivator than greed. So understanding the psychology of what goes through the average investor's minds when you're learning, when you're growing, when you go through pullbacks in the market, do I buy more? Do I sell? And some people just take the long-term buy and hold approach. And we've had, kind of 20 years of, at some point things will pull back and they'll go flat for a while. And the Magnificent Seven and the NASDAQ have been a great engine of return and growth for a big part of the market. But understanding, what kind of an investor you are, your tolerance for risk and time horizon. And that's the challenge with a lot of these crypto investors is a lot of them, their timing was perfect for putting money in.
Correct.
And if you didn't sell that and monetize that, and it was just so many lessons learned, a lot of those investors borrowed against that, leveraged against that. It's like a house of cards.
Yeah.
And then when crypto went from, 2000 to 68 or 69, the top, and then pulled back, a lot of people never sold because they kept drinking the Kool-Aid and think it was going to go up forever. And there was a very legitimate window to make a lot of money, to make outlandish returns.
Correct. No, 100%.
That's not normal. That's not normal.
Yeah. I think what goes up that fast is going down very, very fast. Yep. Now, it doesn't mean it won't go back up again, but the volatility, you have to be able to absorb that volatility. I know some of my friends who have taken the money out of their 401k, they moved into self-directed IRA and put everything into Bitcoin. Maybe crypto in general, I would say. A lot of that exposure was in Bitcoin. They got the 1H account, right? All these accounts where everything's just, that equity is completely wiped out.
So my son is a perfect example. So a couple of years ago, he said, "Dad, I really want to invest in crypto." And I said, "Why?" And his first response, "Everyone's doing it." And I said, "Okay." And I said, "Okay, so how much money do you have saved up?" And he said, "Well, I have almost $500. And I said, "Okay, get to $500 and I'll match you." Because a lot of these crypto retail accounts, the minimum's $1,000 to put in. Yeah. So I matched him and I said, "Listen, you need to understand that and be very comfortable that you could lose your $500. So if for me, $500, it's fine. But if he can learn some of those life lessons as definitely as possible, to respect and appreciate the market, knowledge is power. Wealth isn't built overnight. So the value of his account, I think, went up to almost $9,000, which for a 14-year-old kid is a lot.
Amazing. Yeah.
And it was great because he did a full round trip. And I said, at about 7,500, I said, "Listen, why don't you take your principal out?" And he goes, "What does that mean?" I said, "Well, you've got $1,000 in, take the $1,000 out. So if it goes to zero with anything," he goes, "No, Dad, it's okay. Trust me. I got it." So I think his account went down to, $600 or something. And now it's, 1,200 or whatever it is.
Yeah.
And, but seeing him asking different questions and seeing his psychology change, were very powerful lessons to him, for him to learn at this age.
Definitely.
And that, because those investors that did really well during that window, they think they're smart. They have this kind of arrogance about them.
Yeah. It is. And it actually happens in every aspect, every sector. It's not just about, it's not a ding on Bitcoin or crypto.
No, not at all.
That the same's true for anything, right? People have been investing in real estate for the last decade and can only go up to the point where everyone bridge loans with no rate caps because interest rates will never rise. Of course, it'll never rise. It'll stay at 2% forever.
I remember talking to my father about a mortgage that he had when rates were, 15 or 16%.
Yeah.
In Canada, our mortgage system is different. So every we have either like 3 or 5 year fix, whereas in the States there's 30 years. Every year, almost 20% of mortgages are coming due. So I have friends that built their dream home and they have, multi-million-dollar mortgages. Right. So their cash flow is shrinking. It's gone from, your $5,000 mortgage, whatever a month, to $10,000 or $15,000 a month. And so that's why this higher for longer narrative, maybe it plays out, but it's going to hurt a lot of people. And in the States, again, you somewhat shielded because you've got these 30-year fixed.
30-year fixed, yeah. I think the arms are getting popular again because the interest rates where they are, because arms are usually, but I think arms, it's a ticking time bomb if you don't know how to manage it.
Yeah.
Right? 5-year, 10-year, 3-year, whatever arm it is. If you don't watch that money at that rate, because it can, I remember my first arm, man, it was like 2002, 2003, introductory rate, right? Back then, it was no income and there was nobody who was looking at anything. I'm like, yeah, let me just give an arm. It'll be fine. Dude, it went up to like from 2.5% to all the way up to 3 or 4 or 6%. It was a rental property. All my yield was wiped out.
Yeah.
And it was not big loan, so I was able to pay it off and kind of at least manage the control. But for, like you're talking about your friends who build their dreams homes of millions and millions of dollars in assets that are locked into the in liability, they're going to start hurting. If you can't sustain that cash flow, it's going to start hurting.
Yeah.
And I actually didn't know that Canada does not have a 30-year fixed mortgage. I think we're so different here when you look at it that we don't appreciate that 30-year mortgages. India doesn't have that either.
I know. And we have, higher. In Canada, you have to put down a minimum of 25% of the home that you're buying.
Right.
Where in some states, you can put down 5%. And,
you can.
The global financial crisis, you can put down
0.
2%.
Yeah.
So I think, we don't have as much debt, but, certainly right now we're going through a lot of pain, and the longer it stays at these levels, because we have a lot of mixed economic data as well. But we kind of, almost like a jellyfish follow what the US does.
Right.
And,
right.
So I think it's super interesting and maybe transitioning into the metals side. I mean, I have, a disproportionate amount of my family's net worth in metals, from gold and silver, copper, lithium, uranium, again, really trying to, and nickel, cobalt, really trying to capture everything that goes into, the battery metals, the EV, the decarbonizing, and knowing it will take 10, 15, 20, 30 years to really make a dent and an impact. But it's tough because you've got certain countries that don't care about it. Sorry, that may be too harsh.
No, I think it's right.
Understand the cost and the time associated with it.
Yeah.
And I've said, we can't afford that. And so we're going to pollute more and try to buy carbon credits. So that's really why I've in the last 5 years, done a lot more investments into copper, everything that goes into that decarbonizing, getting to that carbon neutral, because I think it's a very real trend. A good chunk of the world has bought into that. ESG is more prevalent in certain countries or continents than others. And then you're seeing a massive shift. You're seeing a lot of money flowing into these funds, and maybe some of the early money has been made. But you look out 10 years, 15, 20 years as to where some of these metals will be, they'll be dramatically higher than where they are today.
Yeah, I think it's just the supply demand, because nothing can work without a lot of these. What is it? Are they called? What are precious metals that are used in? Isn't there different names for metals that are used in semiconductor? Rare earths?
Yes.
No, they're not rare.
So copper is a base metal, and copper is central to this whole decarbonization of the world. And just to give an example of how dire it is, the world's largest copper mine is called Escondida.
Yeah.
Biggest copper mine by 2 to 1. It's in Chile. It's a massive mine, and the world needs to have a new Escondida every other year to meet the metal demand. And the average time from permitting to actually pouring metal, having a concentrator or a doré, a bar, is 10 years.
Wow.
Yes. So that's a big problem. So that's where, in the States, I'll come back to this. Dakota Gold is on private ground. So we actually own the ground. And there's what's called BLM, Bureau of Land Management, usually a state managed by the state. And then U.S. Forest Service is managed by the federal government. So, from a timing perspective, from the number of hoops you have to jump through, being on private ground is the best because you don't have to deal with the federal government.
Got it.
BLM is sort of that maybe 3 years to 5 years to build something if you have local support. Getting that local support is so important. And then federal ground, it can be 5 to 10 years or never.
Wow.
Now the big hot button issue in the States is water. So if you're contiguous or close to a water source, it can typically be a lot more challenging and you're met with a lot more resistance than if you're in an arid or dry region, which presents its own set of challenges, but at least you're not going to impact a water source.
And why is water? Because you're impacting the water tables? Is that the reason? Or you're
historically, historically there have been a number of mines that have just directly put pollutants into rivers, streams, and it's not just in the US or Canada, it's everywhere in the world. But now there are different standards and there are different water quality. So you now generally have a water treatment facility, so the water gets treated and then it gets to a certain standard and then it can be released back into the wild or be ready for drinking. So a lot of those standards weren't in place 20 years ago, 50 years ago, 100 years ago.
Yeah.
So, and I think that there are certain regions within the US where water is scarcer. You look at, like Las Vegas and Phoenix get a lot of the water from the Colorado River, and these underground water aquifers are being drained, and that's why, there's desalination plants being built in the southwestern and eastern parts of the states to dredge and have a pipeline of water, of seawater. It gets treated, and then that can be what's used to, for watering golf courses, for drinking water, for household use and consumption. We live in the Pacific Northwest where it's a very, it rains 8 months a year here, a lot of runoff from the mountains. So, but if global warming continues, you will see less snowfall. You'll see less runoff from mountains, which a lot of, agricultural farming relies on that runoff. So it's all connected, and it's super fascinating and interesting of how this is all shaping up.
So Jonathan, let's talk about, I think, the elephant in the room then, right? Because you talked, and if I'm misquoting you, let me know. I think I heard you is that we're going to fight the bullet on pollution and create pollution. We're going to go deeper into the right now, and we're going to offset it with buying carbon credits. And I think I heard you saying that. And then also within the next 5 years, we're talking about climate change, global warming, right? So these two I see it. They're conflicting, right? Our demand is not to create resources in a way that is not promoting global warming, but then at the same time, our needs are natural resources, and to get them to run our cars, to run our solar panels, to run our anything that we want to do on a carbon neutral basis that runs on natural resources, which is going to create a ton of pollution anyways. So help me understand this complete paradox where the need itself to wean off of these resources is creating the need to generate more pollution to create these resources.
Well, it's probably one of the, if not the greatest challenges humanity's ever faced, because, there's a lot of data supporting, global warming and what's happened to the planet. And, if we don't take care of it, it won't take care of us.
Right.
And, everyone's bought into, we need to have more alternative energy. It doesn't rely on fossil fuels. Everyone's bought into that. Okay. And then electric vehicles, great. Tesla has revolutionized that. All the big car makers are rolling out. Okay. So then how is that Tesla powered?
Right.
And still almost 35% of power in the US is powered by coal, which is the dirtiest yet cheapest form of energy. And you look at, other countries in Southeast Asia, a lot of them still power more than 35% of everything with coal. And with what happened with Russia, Ukraine, a lot of European countries who had turned off their coal mines, turned them back on because they were concerned about, well, how do we, winter's coming, how do we heat these homes and power this grid that's supposed to power these electric vehicles.
Right.
So, it's really about education. And it's really about to have full stakeholder buy-in, and that everyone can benefit from these natural resources if it's done properly. Where things change is governments moving the goalposts, changing their mind. A lot of these companies that are building these mines are public companies, so you're reliant on capital markets and investment. And again, if there was a global standard that everyone was held accountable to, there would be a different outcome. And I think the younger generation, people who are going through university and coming out of school, a lot of them just don't own vehicles. They just take Uber.
Yeah.
Because you look at the cost to insure an 18-year-old or 22-year-old now with no track record, high risk. I mean, it's expensive. So again, it's not going to be an easy process, but people don't want inflation and want costs to go down. Well, I mean, I don't know how we get there when, all the metals, the number of pounds and kilograms of metal required for a Tesla, for a battery, for your cell phone, for your laptop, and on and on and on. I mean, every iPhone has, I think it's a quarter of an ounce of gold in it. Yeah. And, the copper and the nickel, and that the only place you get that is from mining. I mean, almost everything above ground requires some form of mining, came from the earth. And that's not going to change. And then you're seeing some countries shy away from it that maybe have a large metal endowment because they don't want to disturb the environment, but yet they're creating this undertone of strong metal prices or inflation, and the supply chains are getting, disrupted because you've got de-dollarization, you've got these allegiances and alliances. You're either, sort of pro-US or you're against US. Yeah. And certainly if certain political figures get elected, that's probably going to be reinforced.
Yeah, so that's an interesting one, right, Jonathan? Because I think I completely understand with you. I think we're both the messages are very important. I think like leaving the world a better place from where we are in is very important. But at the same time,
you nailed it though. That right there is so important. Sorry to jump in. So in our messaging with Dakota Gold, we have talked about repurposing already disturbed ground for future development, for future mining, future processing. So we're not creating any new disturbance. So we're going to repurpose already disturbed ground for future processing and development. And our intention is to leave that in a better place than when we got it.
So how would you do that? So let's actually go deeper into Dakota gold mining itself, right? So when we say that we're repurposing already disturbed land, so is your thesis that there's more gold left in there?
Yes, very much so. So this is one of the largest concentrations of gold anywhere on the planet. Mm-hmm. Not just the US or Canada, anywhere on the planet. And so when Homestake was mining here for 125 years, 40 million ounces of gold came out of the Homestake mine in Leeds, South Dakota. Homestake, the company, started to step outside of the old mine in the late 80s and early 90s. And they were very successful in finding additional gold mineralization in the camp. Low metal prices, under $300 an ounce, late 90s. So when Barrick acquired Homestake, it was for other gold mines, other gold assets in Homestake's portfolio. So the mine went on care and maintenance. And then we bought some of these assets from Barrick out of their closure group.
Got it.
And we got all the data. So yeah, there's a lot more going on. And we think what we have found is a continuation of the mineralization from the old mine, because we're contiguous with the old mine. And these are a lot of past producing mine sites where there is already disturbance within the land. So for example, when we drill a hole and we disturb a couple of acres of land, we've already reclaimed a lot of that land. So last year, we drilled, almost 50,000 meters of core net. So what we disturbed and then what we reclaimed, we only disturbed less than 3 acres. When people say, "Oh, mining's bad," hold on, just dial it back here. So why is it okay for someone to put in a new golf course that's consumes more water per capita than anything else, but yet we're potentially providing a metal, gold and silver. There's critical metals in the district as well that the world actually needs, and doing so where almost net. Our goal is to not disturb any new land, and is to reclaim the land, repurpose it so it's in a better position than when we got it. That is our primary.
Sorry to cut you off, Jonathan. When we say reclaim land, I want to make sure people understand, what does that mean?
Okay, so when you're building a pad to say drill a hole, you build a road. You're gonna have to build enough room for your equipment and your drill rig, and a sump, which is where some of the water gets stored before it gets re-released into the wild. Yeah. So when you stop using that pad, you'll typically plant, either seedlings, reforestation with some trees, make it look like so there's less of a scar, less impact on the environment. And we're doing that. So one of our areas, there are actually a few homes in the area, and so we're drilling not in like someone's neighborhood or backyard, but where there are people that have second and third homes, and we've had one complaint in 2 years. And the complaint was misguided because we had this couple that thought we were fracking. And we said, that's an oil and gas.
Right.
We're gold and silver exploration. And they said, really? And we brought them out to the drill rig and took the time to educate them. And they were blown away. And now they're shareholders of Dakota Gold.
Love that.
You know, I think when you take the time to listen to the community and to be one with the community where everybody can win, and I think that's really the work that, you know, my partner, Jerry Aberley, who's the chief operating officer of Dakota Gold, he was the last mine manager at Homestake when it shut down. So he's from South Dakota. He was born and raised here, worked at Homestake. Managing and being responsible for the environment is something that's a core part of his DNA. And I strongly feel that that's part of the reason why we've had a license to operate, is because we're so embedded locally and socially. And I think where mining gets a bad name is where a big international company comes somewhere, is not from there, doesn't care about the community, doesn't care about the environment. And I'll use a bad phrase, you know, kind of rape and pillage, take and then go. Yeah. And government's saying, no. If you want to be here for 30 or 40 years and you want to, you know, have 30 or 40% or 50% of the local workforce is yours and commit to being here, we will do business. You know, so I think having that platform and that foundation and ties to the local community has served us really, really well.
So Jonathan, thank you for explaining that. Let's shift gears a little bit into how can people take advantage of investing in gold through mining? Maybe a different question. Then we'll go into that one too. Is it better to hold gold and own gold as a bullion and kind of keep it somewhere safe? Is it better to invest in a mining operation, and why? And I know you may have a biased answer because you own one. I want to give more of a objective answer, if may, so that people can parse it out, because no one investment is good for anyone. It's just that every investment has a role to play. So what role does a mining?
Yeah. So I think there are three primary ways to own gold. You know, you can own the physical. So, you know, coins, you know, bars. And again, there's a cost to store it, insure it with the more gold you own. But a lot of people, that is how they get their exposure to gold.
Correct.
Is through physical gold ownership. The second way to get exposure to gold is to own some of the ETF, the exchange traded funds, where they own a basket of gold companies. Mm-hmm. So the two big ones in North America are the GDX and the GDXJ, the J standing for junior. Dakota Gold is a part of the GDXJ.
Okay.
So you're taking a basket approach. So you could say that's a more risk averse approach to getting exposure to gold. And then the third way is to own individual gold companies. So you could say, well, why would I want to do that? Well, some of the gold companies now pay a dividend yield in that 4 to 5%, which is pretty respectable. And depending on when you invest, you can have a significant appreciation in the share price of some of these metals. So those are the three primary ways to get exposure to gold. And I think you're seeing the opportunity, I think, for the gold sector is that it's an under-owned asset class.
Yeah.
You know, less than 5% of Americans have any exposure to gold. Yeah. So it's a very small asset class when you look at what it is globally. And now it means more in some countries in Southeast Asia than it does maybe in North America or Europe. But I feel with where the world is going and this kind of de-dollarization, the role the central bank and the Fed is playing, I think, you know, having some kind of exposure, that kind of 5 to 10%, people should have that kind of insurance, that store of value in their portfolio. And then how you choose to allocate risk by owning physical, the ETFs and individual companies, everyone has a different appetite for risk, a different time horizon, you know, different stage of their life. But I do feel there is a place for gold in everyone's portfolio.
Yeah. So Jonathan, I know you just still the funding round, but if somebody were to invest in Dakota Gold, what would that look like? So let's say in future you open it up again. That's an opportunity for anyone listening to the show. If they want to be part of it, what does that look like? What does that process look like? Are they becoming a shareholder? Are they getting a dividend yield? Are they getting physical gold somewhere? What does that look like for somebody?
Yeah. So if somebody was to say, you know what, I like what Dakota is doing. I like where it is. I like the people. You know, they're big shareholders. They've been buying stock. They're super aligned. They've had successes before. You know, if you have a broker or if you have an online account, you know, our symbol is DC, David Charlie DC on the NYSE American. and you would buy shares through that way. At this time, we don't pay a dividend because we're not producing.
Yeah.
But what we're trying to do is really roll up and consolidate the entire home stake district and have it under one roof. And that's really our goal. It's really our mandate. But again, I think that the timing to look at gold again is starting to get really interesting, with gold being at this strong level with what's happened to rates. I think it's actually been remarkably strong. And I think at some point there will be a pivot with the Fed where rates start to come off.
Yeah.
And that inflection point could be really powerful and very special for gold investors.
Yeah, I always say that it's kind of like, it's not intuitive sometimes. When the interest rates are going to go down, the gold is going to go up. Very high chance. There's no confirmation. Yeah. Don't take that as an investment advice. It's Saket's point of view. So I don't want someone to go buy gold today and then if nothing happens, come back yelling at me. So it's my perspective, and it's based in education, right? Based in judgment call that if the interest rate's going down, that means dollar is losing value. Unfortunately, dollar lose value. A lot of investors are going to head towards assets like gold. I think if there was no Bitcoin, this is again my thesis, if there was no Bitcoin, we would already see a lot of rise in the gold. I think right now, the investment dollars are getting split between Bitcoin and gold. So it's a little bit of split. But otherwise, we would have already seen gold going up a lot right now. It's already flirting at 2050, 2040. I think they touched 2040 recently. I don't track it daily, so I don't know what the numbers are. You probably know that better than me.
Yeah, it's 2026, 2030 right now. And but still there's been significant outflows from the ETFs in the last 6 months to a year. But you're starting to see the pace of outflows slow down, and then you'll see it flatten out, and then you'll see money come in as the Fed starts to pivot. And that's where I think, you've heard the term, be a contrarian. I think that, but also, fund flows. I follow fund flows and anything I look at. And there's a number of different ways to track that. And when you start to see money flow into these ETFs and these funds, stocks will usually follow and be the beneficiary of those new inflows.
Could we talk a little bit about, sorry to cut you off if we're going somewhere. Let me have you finish your thought first.
No, go ahead. It's okay.
You said something very interesting, fund flow. And I'm actually going to say, people always say, follow the money, right? So, and then you said there are multiple ways to do that. I know it's not necessarily specific in gold. Because we touched upon that, could you tell us a little bit about fund flow and how people can actually track it, of what's happening in the market?
Yeah. So there's a number of websites. So, let's just, talk about the gold industry, and there's dozens of different industries that have all of the ETFs, which is, usually passive money. Mm-hmm. And there's ways to track the assets under management. So AUM in these ETFs. And, there's different websites that I go to for gold and silver and copper and some of the metals that I invest in from the individual company standpoint, or for gold, I own lots of physical. I don't own lots of silver physical just because I would need a warehouse kind of thing.
It's not that dense, right? So we need a lot more silver.
Yeah. So quarterly, I track a number of the bigger ETFs that are relevant to my space, to my industry. And, Fidelity's got great tools for that. So does BlackRock. And of course, I get a lot of the research from the brokerage firms. But for the average retail investor, there are a number of online platforms. Morningstar is a great one. Just CNBC, Yahoo Finance. There's a number of great free online platforms where you can track this data, quarter to quarter. I'm also a chart guy, so I like looking at charts because it's, you can kind of see what's happening with the trends. And there's a lot of noise that can happen in there depending on what time frame you utilize. But from my perspective, it's really important to watch those fund flows. So the fact that gold is staying north of 2,000, you've had real rates go from almost 0 to 5.5.
Yeah.
And, the US dollar has been strong and gold is still over 2,000. That to me is incredibly bullish. And I don't want to sound too promotional, but it kind of reminds me of a coiled spring where it's been this, you had this triple top of gold at that 2050. We're kind of right at this level here. And technically, I think you're going to have that next leg up where it's not going to be that 21, 2200, because that's only 5% higher than where it is today. You'll have a materially higher gold price. And again, you're getting to a point in the US where, the cost to service the $34 trillion in debt is $800 million a year.
Right.
Very soon to $1 trillion. you're running $2.5 trillion a year in annual deficits, and you've got a fixed cost of almost $1 trillion a year in your defense spending. At some point, not tomorrow, not next year, probably 10, 15, 20, 30 years out, at some point, that's not sustainable. At some point.
Yeah.
So I don't know how long that is. And this is why you're seeing a lot of this de-dollarization, because the U.S. gave a playbook for these sanctions with Russia and other countries that go against their political or regional or defense interests, and they put these sanctions on, or they seize assets. And countries are saying, you know what, I don't want that to happen to us, because there might be something that we disagree with the U.S. on, not because we want to go to war with them, but because we're trying to do what's best for our country. So super interesting landscape. And I think it's the gold industry is not for everyone. I mean, it's not as volatile as Bitcoin and crypto, but it is, I think it's a way to preserve your wealth, ensure against, financial disasters. And you can't print it, you can't recreate it. It's getting harder and harder to find. And it's a store of value. And I think it should be considered for everyone's portfolio.
Love that, Jonathan. This is amazing, man. I think your thorough understanding of not just the gold industry, but macro in general is very helpful to paint a holistic picture. So thank you for walking through that. In the interest of time, we're coming towards the end of our show here, where we usually ask 2 questions, maybe depending on how the answers come out. So shifting gears here, there's a 20-year-old Jonathan somewhere. I know one of your child just left home, and in that similar age group. What's one insight that you can share with that's going to dramatically, for good, change their life's direction?
Yeah, I think I've always been focused on education and knowledge, but I think looking at that thing, at that aspect sooner, I didn't start reading a lot until I was in university, starting to read different books as early as possible. I would tell my younger self, finding your passion. I mean, I was lucky that book, Reminiscences of Stock Operator, changed my life. So I love what I do. It's not work to me. It's fun. I love working with, the people that I work with and learning about new sectors and investing in new sectors. But it would just be to start as early as you can. And then when I make money in the metals and mining industry, about taking that money out and having diversification and really focusing on that, creating a larger revenue stream of passive, dividend interest income as early as possible. And then that compound interest, dividend reinvestment program, sooner the better. And starting out where you have a job at a university, you're not making very much money after you paid all in taxes and rent, but even putting away, $500 a month or $100 or $1,000, whatever you can, as quickly as possible. And it comes out of your account every month into an account that you do not touch. You can't get access to it. Yeah. Because then over 10 years, it starts to become a meaningful amount of money. And then when you get to a different phase of earning income and investable assets, it just grows and it grows and it's consistent. So it would just be to start doing those things way earlier. Yeah.
That's awesome. Well, thank you, Jonathan. This is actually great advice, because even if you don't want to turn into a gold investor, it's a good investment advice, a good life advice, right? And of course, everyone would want to say that I don't want to change anything about my life, because I won't be the person who I am if I changed anything about my life. But that's one thing that I would say, is that education, it's never too early to be educated. And I think, Jonathan, go ahead.
I would also, Tony Robbins has a saying, great things happen when you get outside of your comfort zone. Yeah. I would encourage people to take, some risk and pursue their passion. I'm an entrepreneur, and so for Dakota, the shareholder, our stakeholders are number one. And you do right by them, and you typically will do really well and build a real business when you focus on those 2 things. And some people just aren't capable of taking risk. But just even doing something, whether it's switching a job from a company that you're not happy with, again, great things happen when people get outside of their comfort zone. And people look at failure as, oh my God, I failed. No, you've learned something, you've grown, and you're one step closer to a great idea or a great situation with a company, or to get that investor, or to find the partner in life that you want.
Correct. No, well said, Jonathan. Jonathan, next question. It's a little bit more non-traditional question, which is going to be more around, as you reflect on your journey, people around you, as you reflect on the macro self, where do you feel humanity is, and where should it migrate towards in the next few decades? Pick a timeline, whatever you're comfortable, but where is the gap, and how can we fill it?
So I do feel that humanity is at an inflection point. I think I'll talk about 2 aspects of that. I think it's at an inflection point from the standpoint of this clean green energy transition and a buy into that, but a lack of understanding for how much capital it's going to take, how challenging it is to mine all these metals. And the other aspect of this, I think we're at an inflection point because there's a lot of racism, there's a lot of tensions in different parts of the world, a lot of different ideologies, and there's a lot of regions that are kind of hot, very unsafe, and have the ability to spread. Again, I don't want to get political, but with the Israeli-Palestinian conflict and what's going on there, and its ability to be a powder keg for the entire region. And then you look at if China does want to go after Taiwan and what the implications there. So it's really scary. So we all inhabit and share the same planet, and so to those two areas, I think there's so much opportunity, but yet there's so much risk. And I think that the stuff that we can control on the providing the metals for the future electrification of this world and decarbonization, I'm really proud and think that that's a real opportunity. And I think that the resistance you get there, you can educate people. Some people are still got this view about mining. Okay, well, don't have a cell phone, don't have a laptop, and don't have an electric vehicle. And if you can commit to those things, then have your opinion. But if you want those things, then educate yourself and evolve. And for for what's happening with these conflicts and these areas, what's happening with it's sad that we've gone almost back in time, and people are people. They want their families to be safe and educated and protected, and they and all these cultural values. And look at all the protesting that's going on in Canada and the US. I mean, it's really bad. And I mean, have your protests. But anyways, I could go on, and it's great. There's opportunity, but a lot of it, the central theme of it is education. And don't make someone wrong for who they are, but also don't push your agenda. I mean, so again, it's a very hot button political issue, and my kids are actually, I think, far beyond me in terms of understanding all of the different pronouns and but no, I think those two issues and areas are going to be central themes for the world going forward, and its ability to get along and work through differences peacefully, and it's I think that represents huge opportunity, but one that has created a lot of uncertainty and people going back to not wanting to travel or speak out out of fear of backlash, being reprimanded. So I mean, I know that's a mouthful, and I don't know if that was the answer you were looking for, but
there was no answer that I was looking for. I think I love to hear people's perspective. I think part of that is that the more we hear about these issues, the more awareness to them, and the more awareness, more curiosity. Because unfortunately, the narrative that we're hearing in the news, or reading in news, or however you consume your current news, it's very biased, right? Depending upon which side you are and who's writing that article. Very few sources that are objective, very few. Even they are not as objective as I would like them to be. So you have to be very careful about the consumption of who you're consuming. That's where I like to ask that question for my podcast. And I know I don't give any time for anyone to prepare. I really ask these questions on the spot because I think a lot of that is really, it's at the top of your head, and it's really burning for you, which is more important for me to understand, so that hopefully people are asking, whatever you're saying, most of us are asking that question. We may not be articulating it, but we're asking.
And my kids ask my wife and I all the time, Dad, there was a kid who was racist towards another kid. And it's a big hot button issue for me, just given my background. And again, we've told our kids to speak up and defend your friends and not violently, but if somebody puts their hands on you, then you have the right to defend yourself. And then there's politics involved, and who the kid's parents are, and
definitely 100%
out, and the kid who didn't do anything or say anything is the one that's getting in trouble, and they kind of twist the narrative. That's stuff that I have a really hard time with, because the kids get confused. And
correct.
So
it's true, and thank you for sharing that, because I think we're unfortunately creating, the powers beyond us are trying to create a divisive world. And that's fine. That's their agenda, and that's okay. I'm not going to say yes or no or good or bad. But unless we feel we push back, their agenda is going to get pushed on to us. It's really more, the more you look at world through curiosity, and I love the way you talk about its education. Right? And I'm assuming you're not talking about college education, you're not talking about school education, you're talking about education in real life. What works?
Yeah.
The school education, the calculus and everything is good, but that's not going to help you becoming a big developer understanding of the world.
Yeah. So we hired someone recently and came highly recommended. They're very, very smart. And I said, so school smart or street smart?
Yeah. Very important.
Because there's someone who, for a situation maybe where there's a contentious issue or where there's conflict involved, conflict resolution, some kids who are just academic or book smart will be ill-equipped to handle a contentious situation where maybe that's more of a street smart kid who maybe struggled in school but thrives in that situation.
Right.
And so we're trying to have this balance of, look, books are important, school is important, but also you've got to get real world experience. If you show up late to a job, you might get a pass. You show up late again, you're fired, you're done, because there's 20 other kids that want that job.
Correct.
And though it doesn't matter who I am or who your mother is or who your uncle, it doesn't matter. You have a job to do. Show up, work really hard, don't complain, and don't expect to get promoted on your first day.
Yeah. My God, man. Yeah. So the new world that's coming, all right. I've been here for 2 hours. What do you mean I can't get promoted? No, that's good. Jonathan, this is awesome, man. Dude, if somebody wants to learn about you, about Dakota Gold, what can they do? Where can they learn? How can they get in touch?
Look, all my contact information is on our website. My email address is jawd@dakotagoldcorp.com. And my contact information is there. I highly encourage, if people are curious or want to explore more about the mining industry, work through any misconceptions they have or curiosity. I think anyone who works in the gold industry has become a de facto ambassador for the industry. So, and I'm really passionate about this stuff. So I'm willing to spend a lot of time on this, because it really is about educating, the next generation of mining investor, because without that, it's going to be tough for the world to get to this, decarbonization, carbon neutral, place, and retail investor, family offices will play a huge role in that.
Awesome. Well, thank you, Jonathan, again. Appreciate your time, buddy. Thank you.
Thanks very much. Great to be on here.
Hold on one second, Jonathan. I'm going to end up recording. Where am I? Finish.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Saket on an investor call. That link is waiting for you in the show notes below.